Hey everyone, welcome. Get ready for a really high-energy deep dive into the absolute core of modern SAP finance. If you're an SAP FICO beginner, a seasoned consultant upgrading your skills, or just prepping for your next big certification interview, consider this explainer your ultimate playbook for mastering SAP S4HANA Finance Master Data. We're going to break down exactly how modern enterprise structures are built from the ground up.
So let's jump right into this massive architectural shift. You've got to wonder, why did SAP completely throw out the old separate customer and vendor master records? Well, the answer really lies in the evolution of global business. Strict global reporting standards, like IFRS 8, are forcing companies to literally rethink their entire enterprise structure. Modern businesses don't just need to know what they owe. They need hyper-detailed, multi-dimensional reporting. And honestly, the old system just couldn't keep up with that level of complexity.
Okay, here's our roadmap for today. We'll cover organizational structure, the configuration flow, the business partner revolution, a real-world scenario, interview prep, and wrap it all up with key takeaways.
Right, Section 1, Organizational Structure. Let's decode the core of SAP Finance.
First up is the profit center. Now, while your company code and controlling area handle the high-level legal and cost accounting, a profit center is a master data object used purely for internal management reporting. It lets you analyze very specific areas of responsibility. Think of it kind of like this. Your profit centers exist simply to tell your internal managers which specific divisions, product lines, or regional branches are actually making money.
Now contrast that immediately with a segment. A segment is an account assignment object that enables detailed evaluations below the company code level. But here is the absolutely crucial difference. Segments exist to meet external reporting requirements. When international accounting standards like IFRS 8 or US USGAP demand that a broad-based enterprise disclose financial info for specific business activities, well, segments are exactly the tool you use to comply.
And this perfectly illustrates the dynamic between the two. On the left, we've got the profit center. It's internally focused, built for management, and serves as the source of our data derivation. On the right, the segment. Completely external focus, built for legal compliance and auditors, and serving as the target for that derivation. You absolutely need both of them to paint the complete financial picture of a modern enterprise.
Moving on to Section 2, the configuration flow. Let's map out the system architecture. Okay, here is your standard step-by-step configuration flow. Step 1, create the segment. Step 2, create the profit center. Step 3, assign that segment directly inside the profit center's master data. Step 4, link your cost centers to the profit center. Now, the absolutely crucial point here is Step 5. When you post a transaction, you don't usually enter the segment manually. SAP automatically derives the segment from the profit center. In fact, SAP officially approves segment usage only if it's derived automatically, just like this. Now, what's really fascinating is the magic happening behind the scenes. If you're generating external financial statements for a segment, those balance sheets have to balance perfectly to zero. General ledger accounting achieves this seamlessly using a brilliant feature called document splitting. It ensures every single line item is properly allocated so your segment reporting is legally airtight. All right, Section 3, the business partner revolution. This explains exactly why SAP retired those old customer and vendor records.
Enter the business partner, or BP. In S4HANA, the BP is the single point of entry to create, edit, and display master data for literally all persons, organizations, and groups. Instead of typing the exact same name, address, and bank details into a vendor record, and then manually typing it all over again into a customer record, the BP centralizes this general data. You enter it exactly once. It is the total game changer.
Look at how a single business partner expands across your entire organization using roles. At the top, the general role holds client-level data, names and addresses. If you need to pay them, you add the FI vendor role for the company code. If your materials management team needs to buy from them, just add the supplier role for the purchasing org. And what if your sales team sells to them? You just add the customer role for the sales area. One single record, infinite flexibility.
But wait a second, the FI subledgers still technically need customer and vendor accounts to function, right? So how does that work? Well, the answer is customer/vendor integration, or a CVI. Think of CVI as the invisible bridge. Whenever you save a business partner, CVI works silently in the background to automatically create or update the corresponding FI vendor or customer records. It's literally what makes the whole S4HANA Finance Master Data system tick. Now, if you're setting this up, you absolutely need to know these BP configuration fundamentals. First, the BP category, whether it's a person or organization, is static. You cannot change it after creation, period. Second, the BP grouping determines the number range. If you want the BP and the FI vendor to share the exact same number, you have to set the FI side to external numbering. We also use one-time accounts to hide unused fields and sensitive fields that trigger really important security blocks.
Because a BP can have multiple roles, you might actually run into field status conflicts. What if financial accounting demands a field be a required entry, but the sales department has that same field set to hide? Well, the system resolves this using strict priority rules. Required entry always has the highest priority. It will override a hide setting every single time to make sure critical data is never missed.
Moving along to Section 4, Real-World Scenario. Let's ground this theory in reality with Global Tech Enterprise. Let's look at how Global Tech is set up in practice. For their strict IFRS 8 external reporting, they've created two segments, manufacturing and retail. For internal management to, say, calculate regional bonuses, they've set up profit centers for North America, Europe, and Asia. Finally, they do business with a company called Alpha Corp. Alpha Corp provides raw materials, but they also buy finished goods. Thanks to S/4HANA, Global Tech creates just one single business partner for Alpha Corp, assigns both the supplier and customer roles, and perfectly unifies their global master data.
All right, Section 5, Interview Prep. If you are sitting for a certification or heading into an interview, you need to know these answers cold. Question 1. What is the officially approved SAP method for deriving a segment? Think back to our configuration flow. The answer: segments should be derived automatically from the profit center's master data during posting. While you technically can build custom derivation rules, auto-derivation via the profit center is the standard best practice approach for sure. Question 2. Why do we use one-time accounts in S/4HANA? The answer here is simply to prevent database bloat. Look, if you have a customer or vendor you rarely do business with, you really don't want to create a massive permanent master record. A one-time account hides specific customer data in the master record, which allows you to enter their specific name and address directly into the document itself, but only when you are actually posting the transaction.
Question 3. What happens if you change a sensitive field in a vendor master record? This is a fantastic security question. Due to the dual control principle, changing a sensitive field immediately triggers a payment block for that specific vendor. The system will absolutely not process payments until a second authorized user logs in and confirms that the change is completely legitimate.
Finally, Section 6, Key Takeaways. Here is your ultimate consultant summary. To quickly recap our journey today, profit centers are your internal engine, driving management reporting. Segments are your external shield, fulfilling strict international reporting rules like IFRS 8. The business partner is the new standard, centralizing your data seamlessly using roles and categories to completely eliminate redundancy. And finally, none of this legacy integration works without CVI silently syncing it all to the financial subledgers in the background.
I'll leave you with this provocative thought. How will you design your enterprise structure now that you actually know the true power of segments and business partners? Mastering these organizational units is the absolute key to unlocking the full potential of S/4HANA Finance. It's time to open up your SAP Fiori Launchpad and start configuring with total confidence. Keep exploring, keep learning, and I'll catch you in the next explainer.